Some people say it's impossible to time the market, that in the end trying to buy low and sell high is all just a matter of gambling. But then why are there specialized people that trade various goods? Right? If you know something very well, if you know, for example, the car market very well, you know if a car is very cheap or very expensive. The same is true for property, right? If you know a certain area well enough, if you know how property is valued, you can distinguish between a good offer and a bad offer. Now, the big advantage of Bitcoin over traditional finance is that the data is transparent. Data like this chart over here is only possible because the transactions on the blockchain are visible to everybody. In traditional finance, it's only the BlackRocks of this world that buy this data from the clearing houses. But here in crypto, everybody can look at it, and it's very useful. With data, we can get a market edge. Now, this is the Bitcoin hodl waves. So how much of all of Bitcoin supply has been held for more than 10 years or between 7 and 10 years, between 5 and 7 years, etc. We can see how active is Bitcoin supply. And when we take away the very short-term holders and we just look at the long-term holders, there's a very interesting picture. Roughly 30% of Bitcoin's supply has not moved for the last 5 years. And this tends to increase over time. Now, a lot of that Bitcoin has probably been lost. Thus, the supply of Bitcoin that's ready for trading tends to shrink over time. Yes, there is also Bitcoin mining, but again, this is a wave that shows the holding relative to the entire supply of BTC. So the mining is not as quick as the rate at which Bitcoin gets lost, or at least stored for the very, very long term. Now, once we add the supply between 3 and 5 years, we do see a bit of a wave pattern. In other words, if Bitcoin's price rises quickly enough, some long-term holders are selling. They are moving this supply to the short-term holders that are simply interested in the current rally. Now, the price increase has to be large enough for that to happen, right? Bitcoin went a 100x from 2015 to 2017. We did not see a reduction of the supply of those holders with the recent rally from 16K to 100K. Still, it's interesting to see that because Bitcoin supply gets rarer and rarer, we see over the cycles higher lows, but also higher highs. Now let's look at the data from the opposite angle. So instead of looking at the very long-term holders, let's look at the short-term traders. Here's the supply of Bitcoin that has moved within the last 24 hours. That tends to be between 1 to 2% of Bitcoin's supply. Or 99 to 98% of Bitcoin supply doesn't move on a given day. Now, what about the people that trade somewhat actively? So that hold Bitcoin for a maximum of 1 month. Here we get first interesting signals. So whenever this spikes, it seems like the current trend is turning around. So we had a spike over here when Bitcoin was at 16K. We had another spike over here when Bitcoin was at 70K, then went down to 50. And another spike over here when Bitcoin hit the 100K. So whenever we spike in the transaction volume of those medium-term holders, it seems like the current trend turns around. It also happened here during the bear market, right, when Bitcoin crashed. And since we are currently coming down, right, from 108K to currently 80K, and we're not high on this metric yet, we're probably going to continue with the negative momentum for a while. And so there are interesting patterns that we can't see for traditional finance. We can't see this for the stock market, for example. When the long-term holders tend to turn into paper hands, right, the diamond hands turn into paper hands, that's the point in time where it might make sense to take profit as well. That's the point in time when the tourists come in, when Bitcoin hits new all-time highs, and when the media talks about BTC, and when the people that normally have nothing to do with crypto, when they are buying, that's when we should sell. It's a pattern that repeats itself over and over again. And I think it helps with timing the market. We are not randomly buying and selling. We're simply just looking at what are the smart people doing. Now, what we see over here is the percent of Bitcoin supply that has moved within the last 6 months. And so this tends to increase during a bull run. Again, the tourists enter the space, but also stops increasing very, very quickly once the bull run is over. So this marked the peak very nicely in 2017. It also marked the peak in 2021. And currently, when we zoom in very closely, we could be turning around again. So since the beginning of April of this year, that cohort reduces its exposure. Again, giving the hint that the current negative momentum might just start and that we're likely going to further cool off. We can also go a bit more complex with that calculation. So for example, we can look at coin days destroyed or value days destroyed. So that means we look at the Bitcoin that haven't moved for a long time, and then especially the whales that normally tend to not move their Bitcoin. When they start moving their BTC, they are destroying value days. So when you've got 10 Bitcoin and you're not moving it for 100 days, and then after 100 days you actually do move it, you're destroying 100 coin days. So the longer you're holding your Bitcoin and the more Bitcoin you have, the more you're destroying. And so when this is peaking, it might make sense to take some profit. Again, that's when the dormant whales are suddenly moving their BTC, and that's when the bull run tends to slow down quite a bit. It's not always necessarily at the tippy top of a bull run. So we did see a lot of coin days destroyed when BTC was at 40k, and then we still went 50% higher to 60k. And we also saw a very similar peak when Bitcoin was at 69k. And then again, we saw another rally up to above 100k. It seems like history is repeating itself quite nicely again, which again would indicate that Bitcoin has way more room to fall. We saw a drop of more than 70% over here. And so there's two ways to ride this market, right? We could simply just buy and hold Bitcoin over the very long term, because Bitcoin supply gets more and more rare over time. Some Bitcoin gets lost faster than it gets mined. And so we can ignore the waves. The volatility is massive because there's still enough liquid Bitcoin around. We can see 60, 70, maybe even 80% price drops. But very long term, Bitcoin's price tends to appreciate versus fiat. Again, because of the lost BTC, but also because of monetary expansion, right? This is US money supply, and it tends to grow quite consistently by 6.8% per annum. And interestingly enough, that's also how quickly the S&P 500 tends to grow. So this is the S&P 500 on a linear scale, but here's the S&P 500 relative to monetary expansion. We are now retracing again with the trade war, but this correction is still smaller than what we saw during COVID, and it's of course smaller than the global financial crisis, and of course it's smaller than the global financial crisis or the .com bubble burst. But yeah, is it interesting how the S&P 500 tends to grow at a similar rate to monetary expansion? This vertical line here, by the way, is when Bitcoin was born. So that was after the global financial crisis. Bitcoin never really saw a real correction. It saw only the COVID crash. Here's gold over the very long term again, and here's gold relative to US money supply. Assets tend to simply just move in sync with money supply. Assets tend to increase by 6.8% per annum. Again, because money devalues. And so of course, Bitcoin will at least grow by 6.8% per annum, but probably more again because the supply tends to tighten. Here's the BTC that hasn't moved for the last 10 years. So that's currently at 17%. Here's the BTC that hasn't moved for the last 5 years. So it's currently at 30%. And here's the BTC that hasn't moved for the last 1 year. Again, this is the most volatile because here people are riding the waves. And it only takes 20% of supply to move from long-term holders to short-term holders to then destabilize the rally, which then can cause a drop in the Bitcoin price of 80%. The long-term holders clearly take profit when we hit new all-time highs. This is the realized cap hodl wave, and we want to buy with the long-term holders, we want to sell with the long-term holders. We simply just want to do what the smart money is doing. Bitcoin clearly is a vehicle that moves money from the impatient to the patient investor. And currently, still, the long-term holders tend to sell. We are not depressed in the Bitcoin price at all. Various models work to different degrees, and there's also an interesting aggregate model. So that's the CBBI, and that has the realized hodl ratio, the net unrealized profit and loss, the market value to realized value z-score, all kinds of indicators combined into one. And again, we are not necessarily that cheap. We tend to just cool off yet again. The average cost basis of a Bitcoin investor is at $44,000. And the best time to buy is whenever we are below that cost basis. That's how it works psychologically, right? Nobody knows what the fair value of a Bitcoin is, but everybody knows the current price relative to the price we bought Bitcoin at. And if the vast majority of holders are currently in losses, most people tend to just hold and wait for the recovery. If the vast majority of people are in profit, then some people might take that profit. And then we might consider being a bit more cautious. And right now is a time to be cautious. I don't have a crystal ball either, but I'm simply just looking at the data and at the frameworks that used to work well in the past. And again, unfortunately, we don't have things like the realized price for the stock market, but that's the beauty of crypto. Crypto investing is not just random gambling. If we are informed well, and if we look at the right numbers, I think we can beat the market. Time in the market does not always beat timing the market. There is a case to be made to buy more when we are below the realized price and to potentially sell when we are above. Bitcoin dominance also tends to increase now. It's another metric that shows us that people tend to be scared. Bitcoin dominance shows how important is Bitcoin within all of crypto. And when it's going up, it means people are rather risk off. Right? The altcoins are very speculative. Bitcoin is less speculative. So when people move from risk on to Bitcoin, that means people are rather cautious. And it looks like this will continue for a while. The current trend is very stable. And the altcoin rally historically only happened when Bitcoin dominance was close to 72%. But we might still have to wait until the next year to see such a level. Because of all of those trends, I have been betting on falling prices since Bitcoin hit 100K roughly. What we see here on the right, that's trades that the community has made. So there's some leverage involved, there are some altcoins involved, but again, on average, we tend to currently make money with this market. It's not necessarily about being always in cash, it's simply about being directionally correct. And I think it's actually easier to make money in a bear market than in a bull market because most altcoins underperform Bitcoin most of the time. The Bitcoin dominance is rising and crypto prices in general tend to currently fall. Here's my personal return over buying and holding Bitcoin over the months. So every single data point here shows the alpha, positive or negative, versus buying and holding Bitcoin. And this dotted line is a 12-month moving average. And when we average out all of those data points, we come to 2.2%. So on average, I make alpha of 2.2% over buying and holding Bitcoin every month. Now, I am quite conservative because my net worth relative to my income is pretty high. So I don't want the net worth to crash by 50%. But if you only have relatively small net worth, you can of course take on more risk because then you simply just save a little bit more, replenish the portfolio and try again. But even with a conservative approach, you can still make quite a lot of additional return. Of course, I also dollar cost average into my portfolio, and so that's then how that looks like over time. I'm planning to double the net worth within the next 2.5 years. Beating the market is a long-term game. It's a marathon. It's not a sprint. If you want to learn more about this, feel free to check out the premium membership. This is where I share my own trades. It's also where I share various tutorials on how to properly do risk management, etc. If you decide to sign up for the yearly subscription, we can also have a one-on-one call. For every yearly subscriber, I arrange a 1-hour Zoom call. We can then discuss your portfolio, not just within crypto, but across asset classes. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. Helps the channel grow. See you next time on YouTube or see you in premium. Cheers!